Welcome back, everybody, to another video series, Tips for Mortgages. My name is Mike Parkinson. I'm a mortgage broker with Dominion Lending Centers in Campbell River, British Columbia, joined by my cousin Jaden Bax, mortgage broker in Crossfield, Alberta. Morning, Jaden.
Morning. How you doing, buddy?
I'm doing really well, thanks. We got lots to talk about today.
Yeah, and today was a really good day. Like for mortgage
Yeah.
brokers, we are all doing good today, right?
Yeah, it's the first time they decided not to increase rates in a year. So really interested. That's in Canada. Total different story in the US here. It's going to get really interesting on March 22nd to see what they're going to do. But for all those people in a variable rate mortgage, they did not change the rate at all today. So a little bit of sweat off the brow there for those people. It's been a long haul, right? It's been a long haul, and we're still in the notion that in the next year, we just feel that things are going to have to change. But basically, what they're saying in Canada is like the inflation numbers came in lower. Sorry, what was I going to say?
There was no GDP growth in the
No
fourth
GDP
quarter
growth. That was it.
of
Thank God you're here,
2022.
Jay. I forgot my
Yeah,
thought there,
and
buddy.
that's offset by some of the other the numbers that were maybe not so optimistic, like the job growth and stuff like that. We've
Yeah,
talked about job numbers are maybe not as
kind of
accurate as they
bogus.
could be.
Yeah.
But basically they're sticking to the script of what they said they were going to do, right? It was time
Yeah.
to pause and have a look and see, like they said, there's a lot of lagging things going on, and that's starting to catch up to the market. So, but a lot of interesting things happening around that as well. Like we're talking about the three CEOs of the biggest grocers in Canada going before Parliament today to talk about
Totally.
maybe what their role is in inflation as well.
Little price
Um,
gouging there. Yeah.
Exactly, right. And that's a really interesting thing about this time of the year. We're starting to see a lot of the economic numbers come out for the big companies, big corporations, and things like that. And so the government of Canada can go back and say, you know what, we made our mistakes in some of the policy that caused some of this inflation. Why are you having record profits, double that you've ever had
Yeah.
on the grocery store side? And why is that the biggest driver of inflation, right? So going forward, I think we're going to see some more maybe government intervention into tackling inflation in other ways. But that's, like you said, that's the Canadian market. We have that behemoth to the south that is
Oh,
going forward with things,
it's
and
ugly.
that's
It's
going
getting
to
ugly,
affect us
Jay.
too, isn't it? Yeah.
Yeah, it's honestly like, so they're predicting now the possibility of another 75 basis point to a 1% hike this year in the US. So does that mean Canada is going to follow? No, does not mean that. But what that does is if it strengthens the US dollar. So what it does is it denominates all the other countries' dollars. Like, so our Canadian dollars is going to drop because of it. So it will impact us. And does that mean that we won't have any more rate hikes this year? No. It all depends on data moving forward on inflation, on what happens. If we see an uptick in that, then for sure they're going to go up again. But I think they're going to be really cautious on where they go. And I really feel that, especially the U.S. government, Powell I think he's out to just break something. That's the bottom line, is he's going to keep raising rates. They talk about their terminal rate going up to possibly 6%. I'm like, are you serious?
Yeah.
And we got to talk about the lag effects, which we talk about every single week. So it was 1 year ago that rates started raising, right? So those are just starting to filter through the system now. And it was the smallest raise, right? 25 basis point, and then 50, and then 75, and then 1%, and then
Yeah.
75, 75, 75. So it's really interesting to see. They keep raising rates in the most inverted yield curve since the 1970s and 80s, which means
Yeah.
imminent recession.
Yeah.
So I think they're going to raise rates too much. Well, they've already gone too far in my mind, but I think they're going to continue to raise rates, and that's what they want. They want to see things break, and then then they'll see inflation drop, get their goal. And then what I worry about is that inflation is not going to just stop. I mean, deflation, sorry, is not going to just stop. It could go down to below where they want, and then they're going to have to just cut like crazy, right? That's just, again, just my opinion, my theory, but
Yeah.
I don't know. I don't know what you think, but it's really interesting times.
Well, I think what happens is that affects, it's American policy making, but it affects our economy. That's our biggest trade partner. That's
Yeah.
going to have some impacts on our inflation with the difference in the value of the dollars, right? But we're already seeing that those decisions down there is very interesting, have affected our bond market, right? And so,
Yeah.
the bond market is where lenders go to get their money for fixed rate mortgages. And we've seen that come up significantly over the last kind of week and a half here. Hey, after since the Americans have been so aggressive down there. So I think that the next step, it's going to be really interesting to see what happens, like with that kind of bond market as well. Are we going to, as we diverge on the the variable side of things, are we going to see some divergence in our Canadian bond market as well, and maybe see things start coming down on that side as well? I think it's gonna be an interesting next couple of months on that fixed rate side, because generally speaking, over the last year, we've all been going on, the variable, because that's the one that we can actually see government policy moving, right? But it's the market that pushes the bond rate. So it's going to be interesting to see what happens with the fixed rate market in Canada over the next, kind of 3 to 6 months as well.
Well, and it's a tough call for people right now that are actually buying or actually renewing right now. They're going from 2 or 3, say 3% range if they're up
Yeah.
for renewal now, because that's probably what they had back 5 years ago. And they're like, man, what do we do? Like, we were offered 4.8 on a 5-year fixed. I'm like, be very careful. Yeah, the 4.8 is better than anything we see right now, but
Yeah.
is that going to be great in a year or two? What if rates are back to 2% or less, or whatever, even 3%? That then you're stuck at that 4.8 with a massive penalty if you need to break it. So you got to be really careful on your strategy. We don't have a crystal ball. We're just giving you our opinion and what we see behind the scenes. If you really peel back the economy, it's not great. Honestly,
No.
there's a lot of things. There's tons of corporate debt coming due this year. And you got to remember that the planes and travel's been crazy busy lately, but there's been, I forget how much money was, how many billions were pumped into the system from corporate, what was it? Corporate tax returns.
Yeah.
They had some huge tax returns incentives in the US, and that's now over. So we got tons of junk bonds, which is the lower end bonds coming up for renewal, and they're used to rates at like 3%. Now they're going to be 7%, and they weren't even making money at 3%. And there's derivatives, which are spinoffs from that, as we've seen from Binance, FTX, that all that huge debacle there, where there's the teachers union was part of that. Like, I mean, there's trillions of dollars that are coming up here for renewal on refinance. How's that going to look? How's that going to work?
Yeah.
Just have to, the narrative that they're spinning off is like, yeah, we're hawkish. We're going to just keep fighting it no matter what. I guess my question is, if they were so concerned and fight inflation, if that was their number one thing, they didn't care about anything else, why didn't they just jack rates up to 10% there, 4 or 5 months ago and just be done with it, right? So they know that they can only do so much, and there's a lot of talk here. I think a lot of scare talk that's going to decrease demand. I think that's part of their mandate. So, but who knows? I mean, we could see an uptick here in fixed rates in the short term, and then the second half of the year to me is going to be real interesting. I think that's when we're going to start to see some of these cracks just starting to really explode, right? So.
Yeah, absolutely. And so if you are up for renewal this year, and those are the people that we really feel sorry for, because you're not entering, you were entering the market at a time when there was a different rule book,
Yeah.
right? So if this is the year that you're up for renewal, you want to talk through strategies on that. We know that sometimes you have to renew with your bank because you can't, you won't qualify to go to another lender. We're always happy to have those chats with you, talk about strategy, even with staying with your bank. So give us a call, Mike in BC, me in Alberta. Always happy to talk and just try to give the best advice possible through a tough time. Hopefully, this is the sign. Today's announcement is the sign of things getting towards back on track, and we start moving in the right direction. So thanks so much for being with us today.
Thanks, Jay, and thanks everybody. We'll talk to you next week.
Have a good one.